Okay, so welcome back again. So here we're going to be talking about the very last costing method that we're going to be learning today in class. Now, that's just only when we're looking at periodic inventory, right? If you go ahead, if you already went ahead and looked at the calendar or schedule, not only are we going to be learning periodic inventory, we're going to be actually also learning perpetual inventory. And yes, we're going to be looking at utilizing all three of the costing methods. When we look at perpetual inventory. So we got to look at FIFO, we got to look at LIFO, and today we're going to be looking what's called weighted average. We'll talk about what moving average is because, again, when we're doing perpetual inventory, you're constantly updating. So we'll talk about why it's called moving average versus weighted average. Okay, and it will make a lot more sense when we reach towards the end. So again, weighted average. Weighted average. Now, this is going to be similar, only one difference. Instead of a cost per unit or a cost per item, there's an average cost per item. Okay, so this is where we're going to get our total cost, and we're going to divide it by our total quantity to find the average cost per item. So again, this is where we're going to actually make a whole bunch of purchases. And for the very last row, when we actually make our total columns, right, that is where we're exercising the average cost per item. Okay? But that doesn't mean you cannot practice, doing the cost per item anyway, because it's just more practice for you. But just know you're not going to be using the cost per item. You're going to be calculating an average cost per item, and that is what we're going to be utilizing to solve for our ending and our cost of goods sold. Okay, now let's go ahead and actually look at the example here. Oh, sorry, excuse me. Okay, so here we're looking at an example. Here, it's the same exact sample that we've been working on for a while. So this time, we are looking at weighted average, okay? So on June 1st, okay, you purchase 100 toys at $1.25 with a freight of $25, okay? Then the second one is, then on June 11th, you also purchase another, sorry, someone came into the classroom. I just want to know, it's Sandra. Yes, it is. Good morning, Sandra.
I'm sorry, I got lost the time. I was like doing the test. I'm sorry.
No worries. Well, yes, that's fine. Good. Okay, so going back to the lesson. So here. We're talking about, okay, so then on June 11th, we also made another purchase of 100 toys for $1.28 with a freight of 26. Okay. And then lastly, we have the June 15. Okay, you have a total of 80 toys. Okay. So again, we're gonna we will be practicing journalizing. If you want to practice journalizing today, we could do that for the second example. Actually, let's. No, it's up to you. We could probably practice this part right now. When we get to the example, okay, just so that we can utilize the time in class. So our example here is where we on June 1st, we made a purchase of 100 toys at $1.25. So here we are, purchase expense and freight expense, and depending on how you paid for it is your total. So now we're actually going to apply it to our actual inventory table or inventory worksheet. So again, quantity times the unit price is going to give you, again, the purchase price. If we add our freight, that's going to give us our total cost. Now, this is where the question is. When we're solving for weighted average, you actually have an option. Do you want to calculate the cost per item? It's not necessary. Because again, at the end of the day, you're not going to be using that number. But again, for practices or purpose only, I'm going to go ahead and say yes. I'm going to go ahead and calculate that cost per item. Now, especially if when you're doing weighted average and you only have one batch of items, then your average is right there. It's that cost per item because that's the only items you have, that's the only quality you have, and that's the only total cost you have. But however, this is just for practice purposes only, since we know that we have multiple batches. But because it's the first one, usually that should be always done first because it could be your only batch that you have. So there you go, $1.50. Okay. Now we're gonna do the second one, which is June 11th, making a purchase of 100 toys at $1.28, with the freight of 26. So again, purchase price, freight expense, accounts payable. Okay. Then we're gonna plug it right back into our inventory worksheet. So now again, purchase price is there, the total cost is there. And then now the question is, are you going to solve for your cost per item? For this practice, I'm going to go ahead and do it for you just so that you can see what I mean to do, okay? So now we finally finished our worksheet. Now we're going to make our totals. We have the total here of 200. We have a total of 253 for purchases, and we plus our freight of 51 to give us a grand total of $304. So this is where we apply the average cost per item. This is where I'm going to take my total cost of 304 and I'm going to divide it by my 200 items to give you an average cost of $1.52. So as you can see here, these numbers are going to be staying the same. However, the one that we're going to be looking for is my average cost per item. Okay, and that's the number we're going to be utilizing. Okay, so again, just a quick review. When we looked at the first one, it's $1.50 because that's the only batch that we have. But when we do the second one, you can place it there, but at the end of the day, we have a new batch of items. So therefore, you need to get a total quantity and you need to get a total cost in order to calculate the average cost per item. Now, this only stays true if you do not have beginning inventory, okay? Because again, when we're doing this is only purchases only. When we deal with beginning inventory, you're actually going to have to recalculate that new average cost in the workspace area. Okay, and it will make sense when we talk about it. Okay. So now that I have my average cost, I mean, if you think about it, if you have one item that costs $150 and you have another item cost $154, you can assume that it should be in the range of between $1.51 or 52 or 53. One of those numbers should be one of those averages. Okay? But this one we actually calculated and it's $1.52. Okay. So now we're gonna plug in our little answers that we saw from that table into our worksheet or into the bottom half of the worksheet. So we understand that we purchased a total of 200 items. So because we don't have any returns and freight doesn't count, our total items is still going to remain as 200. However, for our total cost, right, we add our cost, okay, the purchase price, and then we also added our freight to give us a grand total of 304. And because we solved for our average cost per item, we know that it is $1.52. Okay. So again, bringing the information down. So here, if we have a total of 80 items left on hand, right? The scenario says that we have 80 items on hand. So now we got to solve for our cost of goods sold, which we know to be the 200 minus the 80 to give you 120. Now here's where it's different. Now, when I'm looking at my total quantity, I know I have 200 items. And I know it's going to cost me $1.52, and I know my total cost should equal $3.04. Okay? So that means since I'm averaging my cost, I'm actually not going to keep my batches. That means the only number that you have is your average cost per item. So you're just going to take your simple number that you sold and you multiply it by the average cost per item, and boom, you have 182.40 right there. Okay, and then of course, solving for the ending balance, you can either take your remaining amount, calculate it by the average cost, or you can actually solve it by subtracting it out from your goods available. So this one's more recommended, especially when we look at numbers that don't divide evenly, or you have half a penny going on, or even thousandths of a penny. That's where it's recommended for you to utilize your goods available, because you can have rounding errors that way. But other than that, straightforward, easy. We're no longer keeping track of batches. We're just gonna take the overall amount, and we're just gonna divide it to get an average cost. Because in this case, we don't care what came first. We don't care because this is something that we're constantly buying. So instead of keeping track of it each batch every single time, I'm just gonna grab a grand total of it, get the total cost, and find an average cost and just cost it that way. So any questions in regards to weighted average? Okay. So as I've mentioned too, because we're taking the average cost, or the total amount that we have, right? So when we go into chapter 8, we're going to be reviewing the same concept, except we're going to be looking at moving average. Because every time we're going to be making a purchase of inventory, we're going to need to calculate that average cost. Every time we sell an item, we need to recalculate, because we don't have those items anymore. So we're going to have to recalculate our average cost. All right. And as you can see, every time we make a purchase, every time we make a sale, the average is moving along, because we're constantly calculating it left and right, because every transaction that you do, every sale, every purchase, it affects the total of the quantity and the total of the cost. So that's why that one's going to be called moving average. The average is being calculated and moving along with the transactions. Okay, so that is something that to expect in chapter 8. So yes. So that's why that one's called moving average, and this one's called weighted average, because it's consistent. It's just one time only. It's weighted. All right. So I'm sorry. Any questions in regards to weighted average? It's the easiest one, and it's the most widely commonly used one. And we'll talk about that when we move into QuickBooks. Okay. So of course, by us completing the inventory table, last thing that we got to do now is complete our conversion entry. So as we've done this many times before, okay, we're just pretty much taking our inventory worksheet and plugging our numbers into our journal. So first things first is we need to recognize that we're transferring expenses into inventory. So our only inventory that we have is our ending balance. So our ending balance, right? Because we recognize that we have 80 toys available, we're going to take that amount and post it there. So there you go, 121.60. We calculated our cost of goods sold to be our 182.40, and again our purchases was 253. Our freight was 51. So now we get a grand total. Our debits and our credits match. Okay. All right. Of course, this can't of course we also learned about having beginning inventory. So as a continuation, right? Because you're not always going to start from square one every single time. This is going to be another continuation problem. And this is what happens when you actually have beginning inventory. So in this case, on June 15, you have a beginning inventory. You have beginning inventory of 80 units costing you at 120. Okay, so that's supposed to be 121.60. Sorry, I apologize for that. Okay, and then on June 18th, you made another purchase of 100 items, and then June 25th, you made another purchase of 100 items. At the end of June, you should have a total of 60 units on hand or toys. Okay, so in this case, we know what our ending inventory is. As we've practiced from the last few sessions or few classes, we understand that our beginning inventory is going to be separated than from what our actual purchases are, okay? So this table here, again, is only for purchases only. So this is exactly why when we talk about doing the average cost, you're not going to be able to solve it here if you have beginning inventory, because you're only averaging out just the cost for your purchases only. You also have to enter in you also have to add in the previous balance again, which was indeed our our beginning balance. Okay, so again, we're just plugging everything in here, right? Taking the average cost because it's our first batch that we purchased. Okay, and then of course we're going to plug in the second scenario here with all those numbers, and even throw in the cost per item just for practice purposes only. So again, we're going to fill out this part, but however, so now this is exactly what I was telling you. Because we have beginning balance, you don't need to solve for that average cost per item, because that's the number that you're not going to be using. You're not doing the average cost for the net purchases or the total purchases. You're actually doing the average cost, including your beginning balance. Okay. Now, how am I going to solve for that? So again, when we plug in all of our numbers here, we're going to plug in our beginning balance, and we're going to also plug in our net purchases. So here, I plugged in all my values. So now I solved that this number here, I have now a grand total of 280 items costing me $429.60. So now we need to take our new average cost per item, okay, and we're actually going to plug it in our inventory worksheet workspace section. But before we do that, I think we're gonna calculate our cost of goods sold. So again, 280 minus 60 gives you 220. So now this is where we're gonna take our average cost per item. Since we have a total of 280 and it's gonna cost me 429, now I'm going to calculate that. I'm going to take my 429 and I'm going to divide it by my 200 to get an average cost of $1.53 and $1.53.43. Okay. So then once we actually retrieve and we did that extra calculation on completing the average cost per item, now we can go ahead and solve for our cost per item, because we know, our cost of goods sold because we know what our average cost per item is. We know that every time we sell something from this batch, this is how much it's going to cost me. So I just multiply it. Oops, I think I have the answer here already. I just multiply it across 220, and I multiply it by the $1.5343 to get me a grand total of $337.54. So in this one, we're not calculating based on bundles. We're not keeping track of what came first and what came last. We're just getting a grand total and we're just calculating it, and we're just going to do only one calculation, all right? Pretty straightforward. And then, of course, taking your finding out what your ending balance is by subtracting the goods available minus what you've cost of goods sold. So again, this is where I was talking about your rounding errors. If you rounded too early in your cost of goods sold, then and if you round your ending balance, this is where you can either add a couple pennies here and there. So you want to make sure that at the end of the day that they do come out evenly. Does 9206 plus 337.54 equal 429.60? 4 plus 6 does indeed equal to 0. Okay? So just a little friendly reminder there. Now, for weighted average, you are most likely going to have to round the last to round to the nearest penny when we get to calculating our cost of goods sold and our ending inventory. Okay, because rule of thumb too is that when we do journalize in our journal, you're doing it in terms of dollars. Okay, can you cost something for $54.93? Can you actually calculate that for me? Can you give me 93 thousandth of a penny? Can you split a penny for me? If you can't, then you can't journalize it that way. So think of it that way. Your journal is going to reflect of what you're actually paying for or what you're actually doing, okay? So in terms of dollars, meaning there's no actual cents, okay? But again, inventory worksheets, I rather you not round until the end because of that one notion. If you are selling more than one item, if you're selling thousands, 10,000s, hundreds of thousands of items, that extra penny or that tenth of a penny, thousandth of a penny makes a huge difference when it comes into your profit margins. Okay. So there you go. Okay. Any questions in regards to weighted average? I'm going to take that as a no. Okay, so again, we need to complete the conversion entry. So pretty much taking things that are already existing in that table and you just plug everything in. Okay. So the last comment I wanted to talk about is now let's go ahead and look and compare and contrast. Now that we got to learn every single costing method except for specific ID, now that we got to look at every single one, utilizing the example of what we talked about in the PowerPoint, now we're going to compare and contrast the difference between all three methods. Okay, so let's look at FIFO. FIFO, we had total goods available to be at a high price, right? It's going to be 304, 304, and 304. But the difference between it, what happens is towards the ending balance and how we cost it is that for FIFO, since we bought everything, we gradually bought everything, and what we noticed is that every time we made a purchase, the average, or not the average cost, the cost per item kept getting more and more expensive. And that's going to be reality, okay? Because we have to understand that the dollar loses its value over time. So the more purchases you make or the longer your company is, it's not going to reflect the same, okay? But in this case, we're looking at ending balance. Notice this, because when we utilize the first in, first out rule, we actually got rid of our cheaper items, or it cost us less to acquire. All right? But by doing that, that means our ending inventory is going to be more, it's going to cost you more. Okay? So as you notice here, my ending inventory for my FIFO is $123.20. Let's take a look at LIFO. LIFO, we got rid of our more expensive ones first. And now our ending balance here is only 120 even. And then of course, when we look at our average costing, we see that it's in between 123 and 120, which gives us an average cost of 121. So notice these scenarios. So tell me, which method is going to be the best method for your company? It depends on what the product you sell and how you want to determine it. Most cases, if you are in the business and you're planning to go for a long run, right? You're planning to stay in business for a long time. If you are not a grocery store, then average cost is average, weighted average would be the most efficient and the best one, because if you're constantly buying every year, or you're constantly buying every week of inventory, then that's the best way to go for you. But again, this isn't how this isn't me telling you what to do, but this is pretty much giving you an understanding and what's more commonly used between the major businesses and stuff like that. When we go into QuickBooks, you're going to learn that FIFO and LIFO, none of that exists. Your only one that exists is average costing, because they also assume that if you are in the business of even selling an item, and you're going to be obviously selling large quantities, you're not going to just sell one item. You're not going to sell just one item a month, right? You have it's the assumption that you're at least planning to either purchase or sell at least more than 100 items. So that's why they have the average cost for there. And again, it's the most common one and it's the easiest one. As we looked at every single problem we've done, can you tell me which one is the easiest one? If we do FIFO, you have to keep track of what came first. If you do LIFO, you got to keep track of what came first as well, so you can identify which batch you're going to actually cost out. Where the average cost is, it's just one bundle, and you're just going to calculate it as is. Okay. So looking at all three ones, it is going to be depending on what kind of company of your company you are, or what kind of item you sell, whether it's best for you to calculate FIFO, LIFO, or weighted average. Now, we're only talking at inventory at a smaller scale. Let's say you do sell multiple items. Then yes, you can utilize all three methods if you like. There is no one size fit all. If you have inventory and you are, let's say for example, Walmart. Walmart's not going to just do average cost on every single item that they sell. Again, it just depends on what product it is. So this is where the notion where you have to be consistent. Now, again, if you are choosing to utilize one type of method for one type of inventory, it is necessary that you have to be consistent. You can't do 1 month is FIFO, next month is LIFO, and the month after that is weighted average. It has to be consistent. So for example, groceries, right? I think the best way to calculate groceries is going to be FIFO. You need to keep it consistent. So every single month it's going to be FIFO, 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 FIFO. Okay. Now there are rules and regulations where if let's say you do try out a method, and you do decide that you are going to shift into another method, yes, you can do that, but only given during specific periods or for your accounting period. Usually they'll let you do it at the end of like they require you to complete at least one whole solid year before switching you over to the other one, just so then you're consistent and your reports come back okay. But number one rule is that once you pick one, general rule of thumb is you should stick with it consistently throughout. So again, when we go into Coffee Cafe, we are actually going to take a look at having a FIFO and I think we're going to be taking a look at FIFO and weighted average. Yes, in this one, yes. So we're going to be looking at making purchases and costing them out that way, okay? Any questions in regards to inventory or any of the costing methods and rules and regulations for them? So again, you can utilize all three for your company if it makes sense, as long as each product or each item is designated one method and you're consistent. Okay. No questions? Okay. No point for a course review. You guys pretty much got that the first time. Okay, so let's go ahead and complete our very, very first exercise here. So again, since we are planning today to leave early, let's go ahead and practice journalizing these transactions so then we can try to get our feet wet and kind of understand what are the necessary steps to go ahead and complete this transaction. So this is how I want you guys to do it. What we're going to do is for the first section only, we're only journalizing the first section. If you are utilizing the if you are utilizing the Excel file, you have plenty enough space to journalize here, okay? But if you are using the worksheet, you may have to either, if you're actually working on the worksheet, you may have to just add a couple more lines into your worksheet. So for example, like here, you just add a couple of more lines in here, okay? And then one whole sheet should be enough to practice, okay? But if you're writing it out, you may need to just draw the boxes for now, okay? So first things first is we're gonna recognize this. I want you to be able to practice this because this is what we're gonna be doing for the rest of the class, okay? I want you to, this is especially when we dive into our class project, this is what I want you to do. So every single transaction that we read here, I want you to analyze it, and because we already know that this does affect our business transactions, we're going to practice journalizing every single one. And how I'm going to have you guys do it is journal it first, okay? And then apply it to your invoice, okay? So let's go ahead and do that for now. So we have a journal and our invoice, okay? So let's go ahead and look at our scenario. So first things first is going to be on April 5th, you purchase a total of 1,000 units at $5 each, freight costing you $100. So how am I going to journalize this?
purchase expense,
Mm-hmm.
debit.
Mm-hmm. Purchase expense, debit.
It's 5,000.
Yes. So because if you actually are able to utilize your Excel, what you could do too here is you could actually type in the 5,000 time, or sorry, the 1,000 times the $5 and you'll get your 5,000. Okay, so that's what's cool about Excel is you can punch in the formula right then and there, so that you don't have to calculate it in the worksheet. But again, you're gonna also notice that there's a lot of things that you can do. So you, as long as you can lay down the foundation in your worksheet or in your journal, you can always come back to your journal, plug in all the numbers in, and then come back and fill in your debits and credits that way. Right? There's lots of ways on how you can fill in a journal. So okay, so and then what comes after the purchase expense?
Freight expense,
Freight expense.
100.
Okay, for 100. All right, and was I specific on how we purchase these items?
Um,
I don't think so. So it says your inventory method is periodic and it's weighted average. So here we just I just assume. So with this being said, I'm going to assume that everything is going to be placed on an account. Okay, so I want you to practice utilizing that. So what is going to be my equal and opposite credit?
Accounts payable.
Accounts payable. Yes. Okay. And what's my total accounts payable going to reflect?
5,100.
Yeah, so you can add the columns up right there, and I automatically know that my debits and credits match. Okay. Here, I'm also going to enter in a little description here, since we are so I'm gonna write purchase 1,000 toys, or yes, or units, since it's at $5 each. All right. Now that I've completed my journal, the next step is now I'm going to go move it and place it into my inventory worksheet. So this is April 5th. April 5th. April 5th. Okay, I have to fix that. I don't know. I don't know how to fix that. Okay, so quantity was 1,000 items at $5 each with a freight of 100. So again, this is where I can. This is where I was talking about what you could do is to eliminate that having to calculate twice. What you can do is, as long as you can lay down the foundation in your journal, you can come here and then you can go ahead and solve for the total purchase price, right? We're going to take 1,000 multiply by our $5 to get us 5,000, and then we can go ahead and get your freight here, right, of 100, and you can get your total accounts payable right here with your 5,100. So you, instead of calculating it twice, you can eliminate it by journalizing the foundation and then coming here, filling out the worksheet, and then copy the information over in your journal. It's whatever you want to do. If it makes it easier for you to do it that way, so you don't have to calculate twice. But then again, it's like it's also the assumption where the calculation is not that difficult. So it's not going to make it any quicker if you do that, because then you have to go bounce back and forth. So either way, whatever method that you're most comfortable with, utilize it. Okay. So now that we've finished our first transaction, I'm going to fix the date real quick. Okay, so again, format cells. I want this to be the date. And how do I want it to look? I want it to look like this one. Okay. There you go, April 5th. Right? So then what has happened next on April 10? So we purchased 750 units at $5.75 each with a freight cost of $75. So again, I'm going to go to my journal first and I'm going to record this on April 10. So what's my journal going to look like? Say that again. What was that purchase expense?
Yes.
Okay, so here I could just copy the cell over. Okay, this one you could also as well. You could do the easy drop down menu if you guys actually remembered that. Pick from item on the list. Again, so you have purchase expense, or you actually have freight expense. You can you could just type in freight expense and it should be able to pick it up and what do you call it? Auto fill for you, just depending on how your Excel can pick up or notice a trend. Okay, accounts payable. Okay. So what is my total debits going to be here? $43.1250. We have $75 worth of freight, giving me a grand total of
$43.8750.
$43.8750. So the only difference here is when I journalize my description, I'm going to say I purchased 750 units at $5.75 each. Okay. Now I'm going to go to my journal or my worksheet and I'm going to enter in the same exact formula here. So 750 at $5.75 each with 75. So again, my total purchase price was $43.1250 and my total cost is going to be my $43.8750. Now notice this, I haven't completed my cost per item yet or at all. Okay, because I know I'm not going to use that number at the end of the day, so there's really no purpose to actually have to do it. It's just going to it's going to be an extra formula that you're going to be typing in. So instead of doing it now, I'm going to leave it as is because at the end of the day, that's not the number I'm going to be using. I'm not keeping track of my information. Okay. So then what happened next? On April 20th?
200 units.
Mm-hmm.
That's $6.
Mm-hmm. With a freight of $20. So again, first things first is I'm going to journalize this transaction. Because I am utilizing Excel, I'm going to go ahead and actually copy these cells over and paste them right below it. Okay. What was that? April 20th? Okay. And then I can make changes accordingly. So I purchased 200 items at $6. So what's my total purchase price here?
1,200.
Mm-hmm. And my freight was 20, bringing my good $12.20. And then I'm gonna go ahead and edit my information here. So that's the free range that you can utilize with this. But if you're writing everything, you have to write everything out. Okay. Now I got to plug it into my inventory worksheet. So for 20, 200 items at $6 with $20 free. So therefore my total, I just actually placed it in the wrong amount. So then what is my total purchase price here? It is $1,200 plus my $20 freight, giving me a grand total of $1,220. Okay. All right. Let's see what happened next. On April 25th, we purchased 600 units at $625. Freight cost you $50. Okay. Now, this is what you can also do as well, but you have to make sure that you are actually good and actually are able to do it. Now, especially when we are looking at, because we're going to be practicing as a general accountant or a general bookkeeper as well, you're going to be dealing with a multiple journal transactions. So this is where it's very important that you understand when you see a transaction and you know you need to journalize it. Rule of thumb is at least lay down your foundation first. But what you can do is you can actually go to the inventory worksheet. You can fill out the inventory worksheet, okay? 500 items at $6.25 each with a freight of $50, right? You can go ahead and calculate this ahead of time, right? $31.25 plus 50 gives me $31.75. If you can fill that in and remember to go back to your journal and fill it in, then you can do that as well. And that can be one of the ways that you can enter in a transaction. But oftentimes, for those who don't practice this all the time, or this is your first time doing it, rule of thumb, you're more likely going to actually forget about completing the journal. Because what I've taught you so far is worksheet, 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 worksheet. Now that I'm integrating the journal, because this is what we're going to be practicing when we dive into our class project, that is where sometimes you'll finish the worksheet and you'll move on to the next portion. Okay? And that's where I'm telling you that and that's where you can find discrepancies or errors in your journal. Okay? So in this case here, we have the purchase expense. It was for, what was it? This one, for $3,125 plus $50 freight, giving me a grand total of $31.75. And then I'm going to edit this information here to be 500 at 625. Okay? So now we completed our journal. So what has happened next? Okay? On April.
We have ending balance.
Of 600 units. Okay? So here you need to go and do the worksheet first. Oops, sorry. You need to go to the worksheet first before completing the rest of the scenario. There's no journal entry here except for our conversion entry. And we need to, in order to do that, we need to complete the worksheet first. So this is where one of the steps here is, well, I know I need to do a conversion entry, but I'm going to go ahead and do my worksheet first. So then I can get everything out of the way and we can plug in our answers that way. But we know what a conversion entry entails. We know that there's going to be toys at the end of the day, right? We know that this journal is going to happen on April 30th. So we're going to have toys. We're definitely going to have a cost of goods sold. And we know that we're definitely going to have to zero out our purchase expense. and we know that we're going to have to zero out our freight. So in this one, we know what's going to happen. We know what the journal is going to look like. Okay, now that I've placed in my foundation, I can now go ahead and actually fill out the worksheet and do it that way. So first things first is we're going to add up the total in our columns. So how many items did I purchase in total?
2,450.
Yes, 2,450. Okay, I have my total purchase price, or my total purchases, to be 13,637. I have $245 worth of freight, and my total cost is 13,882.50. So this is where we can now calculate our average cost per item. And what is my formula for my average cost per item?
30,882.50
Mm-hmm. Mm-hmm.
divide 2,450.
Yes. So we are looking at that kind of where we're taking our totals of everything and we're going to calculate this way. So if you could go ahead and see that my average cost is going to be 5.667663265. It's a long number. I'm going to leave it just like that in my window so that I know that when I do my average cost per item, then we got to figure out what happens when we need to start rounding. Okay? So first things first, we're going to go ahead, now that we completed our totals and we found our average cost, now I'm going to go ahead and bring my information down. So I made a total purchase of the 2,450. It's that much. No returns for this one. Okay. Freight has no value in quantity, but it does affect our cost. And now we're going to solve for all of this. So there you go, 1382.50. We don't have a beginning balance, so all we need to do is transfer the information over. Okay, and that's going to be my goods available. There you go. So then now my ending balance was 600. Is that correct?
600,
Good.
yes.
So ending balance is now 600. So what's my total cost of goods sold? How many items did I sell?
1,850.
Good. Now that we have that number, right? All we have to do is now calculate how much 1850 times the $5.663.265. Now we need to calculate our grand total here. Okay, so we're gonna take our 1850, right? We're going to take this number here and we're gonna multiply them across. So for those who are using Excel, here is a quick and easy formula for you so you don't have to get an error when you're doing cell referencing. So there, you could also do it this way too, but you just have to be very careful. Now this is a formula that is going to be utilized in accounting. So for your purposes of for those who took the Excel, I don't believe you guys were taught this, but it's going to be equal round. Okay, equal round is going to be pretty much a formula that allows you to round off numbers, such as looking at our total cost, right, or our cost per item. We see that that is not a rounded number, but because we are journalizing this, right, we need to have solid numbers that are rounded to the penny. So how does a round formula work? The criteria is going to be, the first section is going to be your actual formula. What is it that you're trying to solve for? And in this case, I'm going to actually place in my actual equation, which is going to be my quantity, and I'm going to say I want that to be multiplied by my cost per item. I'm going to place my comma to end my argument. And then now the next argument is going to be, how many decimal places do you want to round this number? In this case, we needed to round it by 2 decimal places because we need the nearest penny. So if I put in 2, right, in order to end your formula you're always going to have the ending parentheses. But in this case, I can also press enter. But once I've done that, press enter. So my new number, or my rounded number, is going to be here. Okay, it's going to be $10,482.70. Okay. Now, if I were to just only go ahead and actually, so I'm going to show you on the ending. So if I go ahead and do this, multiply by this, I do a straight formula or straight equation in here. If I do that, it's gonna look like this, or it's gonna appear like this. But if I were to cell reference it, what's gonna happen is that, notice this. This number is actually bigger than that. It's not just 70 cents, it's 70 and 41 thousandth of a penny. So this is where you're gonna get a wrong answer, or you're gonna get your pennies off if you decide to cell reference it this way. Now let's look at the one that I rounded for. If I were to extend that, notice this. It ends at the 70 cents mark. Okay, so that's the difference between the two, and that's why for this kind of scenario, I would recommend to try and to utilize the equal round formula, because we will see it more prevalent in other and later chapters, especially when we're doing depreciation. Okay, so once we do that, and other things such as payroll, since it's a percentage, you're going to get a huge long number, and you want to round to the nearest penny. So here we are. We have our total here to be $10,482. Now notice this. This is where I was talking to you guys about that. The best way to do it for especially weighted average is to go ahead and subtract it from your cost available, because we know that for sure these numbers here are already rounded. It ends at 50. There's no number that goes beyond it. Okay, and you're just gonna take that number, since it's a solid number, and you're subtracting a solid number. Your answer is going to be a solid number. But if you were to just place that formula in there and don't round it, then you're going to take your solid number. That's where I'm talking about, where your rounding pennies your pennies may show up a little slightly different. So that's one thing I'm going to show you, is you're not going to round anything until the very end. Okay, when you solve for your cost of goods sold and you solve for your ending balance, those numbers must be rounded. But for everything else, when we talk about looking at FIFO, LIFO, and we looked at numbers that do have those long numbers, you are not going to round that. Okay, so now that we finished this little section right here, we can go ahead and journalize our transaction. So toys, our ending balance in toys was this 3,399. Yes, that one. Good. And our cost per item is, I'm sorry, our cost of goods sold is going to be this 10,482. Okay. What was our total purchases? Oh, wrong one. What was our total purchases?
13,637.50
And then our total freight,
to 45.
245. And of course, you can calculate them here. Just know that if you do calculate it in the journal, just make sure that you do remove it, since we started our journal and everything so far is equal. So we just want to confirm that that does stay true. So yes, I got $13,882.50 on both sides. So now that I know that, I can remove it. Okay. And then here, what you're going to do is your description will be adjustment entry for periodic inventory. Okay. Now, your descriptions could pretty much be whatever that you feel is necessary that you want to type in. I'm just throwing random things in there because for me, I understand that now my description could be different from your description. And it really depends. And we're going to talk about that when we go into our actual fictitious business. Okay. So, yes. So that's how you complete journal to worksheet, back to the journal, or worksheet then journal. Okay. And that's what we're going to be doing pretty much for the rest of the class. Okay. So now that we actually got that concept down, the next one that we're going to do for the continuation, I'm just going to only have you guys just do the worksheet. I just, because, yeah, I want to make sure that we understand the concept here. So now that we're going to be looking at something that has beginning inventory, right? So the next question here is we're going to be looking at we're going to be looking at continuing the inventory by having a beginning inventory. So on April 30th, you have a grand total of 600 units on hand. Now, this is what I was also discussing as well, too, is now that we have an average cost. So in our problem here, we know that this is what our answer is going to be. We know that at the end of the day, this is what happened. We know that this is the $33.99.80 for the remaining items of the 600 items. Now, with this notion, right, because we are using weighted average, when we're actually transferring the information over, you transfer it to get to over as a group or as the average cost. We don't need to separate which one came first. We don't need to do any of that. We just do a straight over and we bring it over into our inventory on hand. So we had 600 units. And it cost us that 3,383,399.80, right? And then we could take the average cost here as well, just because now it's rounded. So now this number is going to reflect this because in my cell I formatted it that way. But I'm just going to extend it so then you guys have a reminder so you guys know that this isn't an even number. All right. And now that I have that, I'm just going to also add that as part of my table here as my sum. Or actually, in this case, I only have this number, so I can just pull this down. Just like that, okay? So now let's go ahead and take a look at this. So on May 5th, you purchased 500 units at $6.25 each with a freight of $50. So again, what is going to be my purchase price?
3,125.
3,125. Okay. And what is my total cost here?
3,175.
Yes. And here you don't need to do a average cost per item because we know that we are continuing. So we don't need to calculate that. So then what happened on May 10?
You purchase 800 units.
That's $6. Okay.
Right.
So then May 10, we purchased 800 units at $6 with a freight of 80. So that brings my purchase price to be,
4,800.
and that makes my total cost to be
4,880.
48.80. Good. Then on May 20th, we purchased another 300 units at $6.15 with a freight costing you $15. So May 20th, 300 at 300 at 6.15 and
1845.
18.45. Good. And my total is going to be
1860.
18.60. Good. And then on the 25th of May, we purchased another 100 items at $6.30 each with a freight of $5. So May 25th, 100 items at $6.30 with a freight of 5. So what's my total purchase price here?
630.
And my total cost?
635.
And then let's see what lastly happened. Lastly, on May 31st, you have a total of 400 items on hand. So in this case, because I'm just only working on just my worksheet, I'm going to go down here, and we know that ending balance is going to be 400. Okay, so let's go ahead and add up the totals.
170.
Okay. Good. What's my total purchase price?
10,400.
1,400.
Plus what's my freight?
150.
Okay, and my total is going to be
10,550.
good. All right, so again, we're going to copy the information down here. Total purchases of 1,700 items for 1040. Nothing to return. No, freight doesn't have an effect on quantity. Not plus, minus this. And then we have freight of 150, bringing in our grand total to be 10,550, right? So now we have beginning inventory, right? Equal. So what was my beginning inventory?
600.
It was 600. Okay. How much in grand total did that 600 items cost me?
33.99.80.
33.99.80. Okay. And then now we're going to take our total net purchases and carry them down. And then now we're going to add them together to get our goods available. So here, now, this is actually where we could go ahead and calculate our average cost, because now we have new grand total of goods available was a grand total of 2,300 units at 13,949.80. Okay. So here, cost of goods sold, if I started with 2,300 and only have 400 left, how many items did I sell?
1,900.
Good. So this is where you're going to utilize your little workspace here. If I know that I have 2,300, right? Okay, so I'm going to actually place it here. So here, my grand total is 13,949.80, right? And we know that we're gonna divide that whole entire thing by the 2,300. My unit or my average cost per item is going to be
6.0651.
good. Okay, so then remember, this is going to be your average cost of your total cost and your total quantity. So here we want to know how much it's going to cost me to sell an entire batch of 1,900. All right, I'm also going to practice my equal round formula again, just so then things look a little more clean. Okay, so I get a grand total of my items to be, what's
11,523.75.
And now that, because that's a rounded number, I'm going to go ahead and plug that number in here. So then what is my actual ending inventory going to be?
$2,426.
And how many cents?
It says 052,174.
Okay, so you didn't round, but yes, 0.5. So there you go, 0.5. Good. All right. Now that we solved for this, we can go ahead and complete our journal. So again, just to save some time, I'm just going to copy and paste in here. Okay, go down here. And this is for May 31st. And then we have one last entry here, is that we need to also calculate our beginning inventory. So what are my numbers going to reflect? What was my ending balance?
24,2605.
Okay. What was my cost of goods sold?
11,523.75.
Good. What was my total purchases?
10,550.
400.
That's including the freight.
10,400.
10,400.
Yes, 10,400. And then what was the freight?
150.
150. And then lastly, what was the beginning balance that we had originally?
600.
33.99.
Good. There you go. And then just for quick measures, as we always have to do this when it comes to journalizing, is does our debits match our credits? And in this case, let's see. Yes, I got 13,949.80, which again, that is a good note, that we matched, because if we go to our inventory worksheet, it should match your total your total goods available. Okay. All right. Any questions in regards to this exact scenario at all? Okay. Any questions in regards to how we did this, or just how to do average costing at all?
You're gonna post this to Google Class.
I post everything to the Google Class. Yes. Any other question?
No, thank you. You explain everything well, so I understand everything.
Thank you for that comment. All right, so so let's go ahead and take a quick, 20-minute break. So since it's exactly 9:58, I'm gonna round it off to 10. So please be back no later than 10:20. We're gonna complete the second half, or the second exercise, and then we will call it a day. Okay. So 10:20, please.